Let's take a second case study on leverage. You have X Ltd has the following balance sheet and income statement information. Balance sheet is as on 31st March. Equity capital 8 lakhs. 10% debt, say ideally this retained earnings should go to next line. Okay. 10% debt is 6 lakhs. Then comes retained earnings 3 lakh 50. Current liabilities 1 lakh 50. And the total is 19 lakh. You have two types of assets, net fixed assets 10 lakh and current assets 9 lakh, so total is 19 lakh. Then here is your income statement. Your sales is 3 lakh 40,000. Your operating expenses including 60,000 depreciation is lakh and 20,000. Your Ebit, that is your earnings before interest and taxes, are 2 lakh 20,000. Then you have interest, which is 60,000. Then you have earnings before tax of lakh and 60, taxes of 56,000, and earnings after tax of say 1 lakh 4,000. Okay. So basically what you have now is the balance sheet and the income statement. Now let's see what you are asked to find. Determine the degree of operating, financial and combined leverages at the current sales level if all operating expenses other than depreciation are variable cost. So this is the point where you have to pay attention. Okay, you basically have to find all the three leverages, but what they say is their operating expenses other than depreciation are variable cost. And if you want to find your leverage, say the operating leverage, you should know what is your contribution. And how do you find contribution? It is nothing but sales minus variable cost. Okay, so you should know what is your variable cost, and question says your operating expenses other than depreciation or variable cost. So let's first of all find out what is our variable expenses. So here you have operating expenses including 60,000 depreciation is 1 lakh 20. So what is going to be my variable cost? My variable cost will be very simple. That is operating expenses minus depreciation is going to be my variable cost. What was my operating expenses? 1 lakh 20,000 minus depreciation of 60,000. So my variable cost is 60,000. So once I have variable cost in place, then I think the rest will flow automatically. Okay. So now we'll find out the operating leverage. Let's write the formula for operating leverage. Operating leverage is nothing but contribution divided by earnings before interest and taxes. So we should know what is contribution. What is contribution? What is the formula? Contribution is nothing but sales minus variable cost. And what was the sales? I have the information. Sales was 3 lakh 40,000. Okay. So this is 3 lakh 40,000. And just now we have calculated the variable cost, which was 60,000. Okay. So 3 lakh 40,000 minus 60,000. So I understand my contribution is 2 lakh 80,000. Okay. So in this way, I have contribution in place. What is next important is EBIT. I think EBIT information was available straight in the question. So here we have earnings before interest and taxes 2 lakh 20,000. So I think we need not worry much about it. EBIT is 2 lakh 20,000. So here we'll give contribution is 2 lakh 80,000 divided by EBIT. What was the figure? It was 2 lakh 20,000. So 2 lakh 80,000 divided by 2 lakh 20,000, calculation tells me it is 1.27. So what you can understand is if your sales is going to increase by 1 time, your EBIT will increase by 1.27 times. That's what your operating leverage communicates. Okay. So this is first part. Then second, we have to find out the financial leverage, and that is very simple. It is EBIT divided by EBT. And I think both information were available in the question. EBIT just now we have picked up 2 lakh 20,000 divided by EBT. Let me check in the question what is the EBT we have calculated, or it is available in the question. It was lakh and 60,000. Okay, divided by 1,60,000. So 2,20,000 divided by 1,60,000 will give you the value as 1.38. This means if your EBIT is going to increase by 1 time, your EBT will increase by 1.38 times, and vice versa. Vice versa in the sense, if your EBIT is going to decrease by 1 time, then your EBT will decrease by 1.38 times. Okay. And what is it? Question 3? Question 3 is combined leverage. Very simple. We'll take operating leverage, we'll multiply it with financial leverage, which is 1.27 multiplied by 1.38. Okay. So let me check it. 1.27 multiplied by 1.38 is going to be 1.75. So that tells me my combined leverage is 1.75. And what is the implication? If my sales increases by 1 time, my EBT will increase by 1.75 times. Okay. So that's your question A. Now let's see question B. What was our question B? If total assets remain at the same level, but sales increases by 20%, or sales decreases by 20%, what will be the EPS at the new sales level? See, this can be solved in a traditional way. That is, you can find out what will be the revised sales, what will be the revised expenses, what will be the revised profit. That is one way, traditional way. But now we know what is leverage. Okay. When we know what is leverage, why we want to take that long route, we'll apply the leverage. Okay. Because here you basically have to find out what is going to be the effect on EPS. Okay. And how EPS is calculated? Earnings available for equity shareholders divided by number of equity shares. So now your target is you have to find out what is the earnings available for equity shareholders. Okay. So let me have a working note for that. Yeah. We'll go to question 2. In question 2, we have to find out EPS if sales increases by 20%. That is one scenario. And another scenario is sales decreasing by 20%. Okay. Let me just remove this. It's not that perfect. Okay. Yeah. Okay. So sales increases by 20%. In the other scenario, the sales is decreasing by 20%. We have to analyze how it works. Okay. So I'll call this as particulars. And which information I should make use of? Well, let me make use of my combined leverage, because combined leverage will tell me how my profits will react when there is going to be change in sales. Okay. So first I'll write what is my combined leverage. What was my combined leverage? We have calculated. My combined leverage, what we have calculated is 1.75 times. Okay. So I'll write here at both points it is 1.75. So if my sales increases by 20%, my combined leverage tells that my EBT will increase by 1.75 times of 20%. Okay. So what is that 1.75 times of 20%? Let me make use of the calculator. It is 20 into 1.75. That is basically 35%. So it says that if your sales increases by 20%, your EBT will increase by 30%. Sorry, 35%. Okay. So let me write that here. Expected increase in EBT, and that is nothing but item number A into movement in sales. What is item number A? 1.75. What is the movement in sales? 20%. So 1.75 into 20% is going to be 35%. So I would say instead of increase, let me call it as expected change, because we have increase as well as decrease. So instead of increase, let me remove this. I'll use a different color. I'll say expected change in EBT. Okay. Expected change in EBT. If sales increases by 20%, your EBT will change by 20%. And what is the direction? It will increase. Okay. And if your sales decreases by 20%, what will happen to your EBT? That will change, but the movement is it will decrease by that amount, which is 35%. Okay. So now we'll find out what is the amount. We'll quantify the amount. Okay. For that we should know what is the existing EBT. So I'll write existing EBT. Existing EBT means without factoring this change. Okay. Existing EBT means without factoring this change. Let me go back to the question. Question says my existing EBT is 1,60,000. Without factoring change, it is 1,60,000. Okay. Now what is the expected change? What is the expected change? My EBT will increase by 35%. It will decrease by 35%. So first of all, let me calculate what is this 35%. 1,60,000 into 35%. How much is that? It is 56,000. Okay. So here, let me have it. It is 56,000. In this case, it is going to be an increase, so I'll add. Whereas in this case, it is going to be decrease, so I'll subtract. Okay. So now I'll have what is the new EBT. So here I'm going to call this as expected change in EBT. Now I will have what is known as new EBT. New EBT is nothing but sum of two items, your C and D. Okay, C and D, and here I am indicating the sign whether it is positive or negative. So now we'll see the total. How much is that? 1,60,000 plus how much? 56,000. So 1,60,000 plus 56 is going to be 2,16,000. And here it is 1,60,000 minus 56,000, so it is going to be 1,04,000. So look at here, how simple we have calculated what is the new EBT. Okay, our new EBT is going to be 2,16,000 and 1,04,000. Now our objective is to find out what is the EPS, right? It means from this we should subtract taxes and we should arrive at what is the earnings available for equity shareholders. Okay, so now what I'll do, I'll deduct tax, less taxes. And do we have tax rate in the question? Let me go back to the question. The question does not make a mention about tax rate. Okay, let me show you that. This question does not make a mention about the tax rate. It just says that your earnings before taxes are 1,60,000 and your tax amount is 56,000. So this means 56,000 divided by 1,60,000 into 100. Let's say, I think this would be 35%. So this tells your tax rate is 35%. Okay. So let's come back. Yeah. So my tax rate is going to be at, let me select, it is going to be at 35%. So 2,16,000 at 35%, how much it works out to? 75,600. And in the second case, it works out to 1,04,000 into 35%, it is 36,400. So now what we can do is we can find out what is the earnings available for equity shareholders, assuming that there are no preference share capital. Okay, so item G, your profit after tax, 2,16,000 minus 75,600 is going to give me 1,40,400. See, I'm not going for calculators now and then. I have calculations made with me. So what I request is, when you solve these kind of problems, try to have calculator with you, do the calculation. Okay. So 2,16,000 minus 75,600, it is 1,40,400. And here 1,04,000 minus 36,400 is going to give me a figure of 67,600. Okay. So this is basically the profit available for equity shareholders. What should I do? I should find out EPS. Okay. So let me pick up the next page. It means basically I have to divide it by the number of equity shares. So how do I know how many equity shares this company has? Let me go back to the question. I think here you have the information. Equity share capital rupees 10 per share. What is the share capital? 8 lakh. 8 lakh rupees 10 per share. 8 lakh divided by 10, you get it is 80,000 shares. So in that way you understand that you have 80,000 shares. So let's go here. Yeah. So number of equity shares are simple. It is 80,000 in both the cases. And you know what is the earnings available for equity shareholders? How much? 1,40,400 and 67,600. So this is your item number G, and your number of shares are item number H. So item number I is nothing but your earnings per share, which is your item number G divided by item number H. And that's nothing but 1,40,400 divided by 80,000. It's going to be 1.76. And for the second case, it is 67,400 divided by 80,000. It is 0.84. So we have calculated what is going to be the EPS when there is going to be change in the level of sales, when it increases by 20% or decreases by 20%. Please understand, we have not gone to the traditional approach. Okay. What we did is we made use of the leverage. Which leverage? We made use of the combined leverage. Through combined leverage, we were able to predict what will be our EBT, and from that EBT, we were able to find out what was our EPS. So this is how we put leverage into use.